Let's recap what we've already learned about double entry and accounts. We know that every transaction has two sides, a debit and a credit, and that they must always balance. We also learned that assets and liabilities form the foundation of our accounting equation. Assets minus liabilities equals capital. This shows what the business owns versus what it owes, and the difference represents the owner's share, the capital. And when we bring income and expenses into the picture, we see how the business earns profit. Income minus expenses equals profit. Now let's practice how all of this looks in real accounts. We'll post the transactions into T accounts and then bring them together in a trial balance to check that everything adds up. Imagine we're looking at a few real documents, an invoice, a supplier bills, and some bank transactions. These are everyday business events. Our job is to turn them into accounting entries. The plan is, first, we'll take each transaction and decide which accounts it affects. Second, we'll record it into our T accounts. Third, we'll total everything up and check that our trial balance still balances. Basically, we're turning business paperwork into balanced numbers. Our first transaction, the owner puts £10,000 cash into the business. Which two accounts are involved? Bank and owner's capital. Let's post that in our T accounts. The bank increases, so we debit bank. Capital increases, so we credit capital. Next, the business takes out a £50,000 loan from the bank. That increases our bank, so debit bank. This increases our loan, which is liability account, credit loan. Then we buy computers for £9,600, including £1,600 VAT. So, debit computers £8,000, asset account. Debit VAT on purchases £1,600, asset account. And credit bank £9,600, asset account. We paid for our office supplies £500, so our double entry will be debit office supplies £500 because our expense increased, and credit bank £500 because our cash decreased. Office supplies is an expense, and expenses always increase on the debit side. The bank account is an asset, and assets decrease on the credit side when we spend money. Now, let's look at another transaction. The business received £2,000 for services we've provided, and the money went straight into the bank account. The bank account is an asset, and assets increase on the debit side when money comes in. The service income account represents our income, and income increases on the credit side. Debit bank £2,000 because cash in the bank increased. Credit service income £2,000 because our revenue increased. Let's look at this transaction. Our client has paid £5,400 for an invoice we issued earlier for software we provided. The money is received into our bank account. Our bank account increases because cash came in. Assets increase on the debit side. Our accounts receivable decreases because the customer has now paid what they owed. Assets decrease on the credit side. Now that we've posted all our transactions, we can check that everything balances. We do this by preparing a trial balance, which lists all the accounts with their debit and credit totals. If the total debits equal the total credits, it confirms that every transaction has been recorded correctly in line with the double entry principle. Here, we can see both sides total £77,500, so our accounts are balanced. That means our bookkeeping is accurate and ready for the next stage, preparing financial statements. Now that we've entered all our debit and credit transactions, let's look at how we balance an account manually. In manual bookkeeping, balancing accounts is an important step to check accuracy and show the true position of each account. How often accounts are balanced depends on the needs of the business. Some do it monthly, others weekly or daily, but all accounts must be balanced. In this example, we'll balance accounts weekly to demonstrate how the process works in practice. To make it clear, we'll use the bank account as our example, since it has several transactions and is ideal for showing the balancing process. First, we total both sides of the account, all the debits and all the credits. Then, we calculate the difference between them. The total on the debit side is £60,000 and the total on the credit side is £10,100. The difference between them is £49,900, which is £60,000 minus £10,100. It's the balance that needs to be entered into the bank account to make both sides equal. The difference is what we call the balance carried down. This is entered on the side with the smaller total, so that both sides equal the same amount. Finally, we bring that balance forward to the next period. This is the balance brought down. It appears on the opposite side to where the balance carried down was entered. If the balance brought down appears on the debit side, it means the account has a debit balance. In this case, the business has money in the bank. If it appears on the credit side, it would mean the account is overdrawn. Balancing accounts manually helps us check the accuracy of our entries before moving on to the trial balance, which summarises all our accounts at period end. Now that we've balanced the accounts, we can take the closing balances and record them in a trial balance. The trial balance shows all the account balances at a point in time. In this case, after we've balanced the bank account. Each account appears once, with its closing balance shown on either the debit or credit side, depending on the account type. The total of the debit column should always equal the total of the credit column. If they don't, it means there's likely an error somewhere in the entries or calculations. The trial balance acts as a check for accuracy, making sure that every transaction has been recorded with equal debits and credits. Although it gives a snapshot of the accounts, its main purpose is to confirm that the bookkeeping is mathematically correct before moving on to preparing financial statements.